This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC oil output plunged in March to its lowest level since the height of the COVID-19 pandemic in June 2020, a Reuters survey found, as the U.S.-Israeli war against Iran effectively closed the Strait of Hormuz and forced export cuts. Crude output by OPEC members in March fell by 7.3 million barrels per day month-on-month to 21.57 million barrels of oil per day, the survey showed, led by cuts in Kuwait, Iraq, Saudi Arabia and the United Arab Emirates. OPEC and its allies including Russia, known as OPEC+, had agreed to hold production steady in the first quarter of 2026 and to resume increasing supplies in April. The 8 members that had been increasing output are due to meet on April 5.
China is poised to extend its ban on refined fuel exports into April, 5 industry sources with knowledge of the matter said, though exemptions could be applied to small volumes bound for countries in the region that have requested help. Discussions for shipment of limited volumes of diesel, jet fuel and gasoline exports to Southeast Asian countries for April were ongoing, 3 of the sources said. 2 of the sources said permitted exports could total up to 150,000 metric tons, while the other said it could be 300,000 tons. Countries that may receive Chinese fuel supplies include Bangladesh, Myanmar, Sri Lanka, the Maldives and Vietnam, the sources said.
Moving on to the top news in the energy sector.
Saudi Arabia may hike its May crude official selling prices to Asia to record highs as Middle East oil became the world's most expensive after the US-Israeli war with Iran caused massive supply disruptions, according to a Reuters survey of industry sources. The May official selling price, OSP, for flagship Arab light crude, the country's most widely sold grade, may rise to premiums of $22.50 to $40.50 a barrel above the average of Dubai and Oman. Quotes, 6 sources said in the survey, $20 to $38 a barrel higher than the OSP for April. The wide range of Saudi oil price forecasts reflects deep uncertainty among Asian buyers following severe price volatility as the war has limited shipping through the Strait of Hormuz, a key choke point for a fifth of the world's oil supplies.
Indian fuel retailers raised jet fuel and commercial liquefied petroleum gas, LPG, prices on Wednesday, following a sharp spike in global prices due to the US-Israeli war on Iran. India, the world's second-largest LPG importer, is battling its worst gas crisis in decades, with the government cutting supplies for industries to shield households from cooking gas shortages. Domestic fuel retailers have raised prices of aviation turbine fuel by 8.6% to 104,927 rupees per kiloliter and commercial LPG by 10.4% to 2,078.50 rupees per 19 kilogram cylinder in New Delhi, the Indian Oil Corporation's website showed. Next, we have the top news in metal market. Japan and France agreed to strengthen support for rare earths supply chains on Wednesday, Japan's public broadcaster NHK reported, in the latest moves by both countries to lessen dependence on the world's dominant supplier, China. During French President Emmanuel Macron's 3-day visit to Japan for talks with Prime Minister Sanae Takaichi, officials signed a roadmap to cooperate on critical mineral supply chains, NHK said. We cannot rely solely on specific countries, especially China, French Finance Minister Roland Lescure was quoted as saying by NHK.
Aluminium premiums in Europe and Japan have surged this week after Iranian attacks on smelters in the Gulf on Saturday intensified concerns over supply of the metal. The European duty-paid aluminium premium for April delivery is up 16% since Friday at $594 a metric ton, the highest premium since June 2022. In Japan, the April premium has jumped to $300 a ton from $250 last week, the highest level in records going back to September 2017.
We will now look at the top news in the agricultural sector.
U.S. farmers plan to plant less corn and more soybeans in 2026 than last year, the U.S. Department of Agriculture said, as the Iran war drives up fertilizer and fuel prices in the latest blow to the struggling agricultural sector. The agency published on Tuesday its first survey-based crop acreage estimate of the year in a prospective plantings report, along with quarterly U.S. grain stocks data. Analysts caution that plantings estimates, gleaned from farmer surveys conducted in the first half of March, could not fully account for disruptions and price impacts caused by the war. As a result, the agency may further reduce its estimate for corn acreage, they said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.